Hi there, Serial Trader here. Let's check in with crude oil. Alright, so I was just looking for an entry here, and we had this advance from what was the bottom, and I was just waiting for some sort of corrective looking pullback to try and get a long entry here. Now I didn't end up entering because as soon as we started getting a pullback, it wasn't a pullback, it was just a extremely quick move down, very impulsive so far. So I'm really not looking to enter a trade at this point. We're at kind of an important juncture in this market. So we don't technically have 4-1 overlap on this particular chart, but on other, depending on the date of the futures contract you're looking at. For instance, when we go look at the August contract after I deal with this chart, you'll see that we do have 4-1 overlap. So it's difficult to reconcile that when you have a rule violation on one chart and then not on the other. That tends to make me more cautious. Okay, it's still possible, at least on this chart, and that we have our ABC down, and perhaps it's just developing more complex than just a simple zigzag. But I'm really starting to favor the odds towards more bearish outcome at this point, and starting to entertain the fact that we might have a significant, tradable top here, just below $73. And I'll get to the other chart in a moment to try and explain my rationale behind that. But so I won't change this wave count just yet, although I'm right about ready to do that. With a little bit more downside follow through, I'll make the switch and embrace that we likely have a key top in here, and then that we're going to be trending down and starting the next major impulse wave down. And right now, if that's the case, we'd be working, the first small degree wave down, and then the next trade, this wouldn't be a trade chasing it here to the downside, but the next trade would be whenever this is done going down, this initial leg, you'd have some sort of a three-wave advance, right? Some sort of a corrective advance that fails to make a new high, maybe does a 50 or 618 retracement if it's going to be a smaller degree wave 2, something of that nature, right? That would be the next trade that I'd be looking for, at least from the bearish side. And really, unless this thing immediately turns direction and starts getting back up and getting above this high, I would not be looking to enter a bullish trade at this point in time. So let's, I guess I can switch off this chart now. We'll go to the candlestick chart here on Thinkorswim. So here's the daily candlestick chart, and this is actually a pretty powerful signal. So here we have a bearish engulfing candlestick. You see it actually opened, let's see here, this one closed at 67, this one opened at 67, so technically still a valid bearish engulfing because it can open at or above the previous candle's close and close below the previous candle's open. And in this case, we did a bearish engulfing, and let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9 prior candles, real bodies that we've fully engulfed. So that's an extremely strong sell signal. When you engulf 9 prior candles of price action in a single candle, that's, I mean, you saw recently on Amazon when we had a bullish engulfing, I think it was engulfing 6 prior candles. That's so far led to a extremely strong price move to the upside. So now that we've done a bearish engulfing with 9 prior candles on crude, perhaps there's some significantly bearish implications here. And I would expect, well, at a minimum, the next 3 to 5 candlesticks, so the next 3 to 5 days, so essentially next week as a trading week, to trend in the downward direction if this is confirmed. Now, to confirm it on Monday, we have to obviously just carry on in this direction. You wouldn't want to see it get too far up as far as a retracement goes into this real body. And then obviously to invalidate this bearish engulfing, you got to get above the upper level of it, which was 67.09. So that would invalidate any short-term bearishness getting above that. But this really looks right to go down. If you see here, so after we had our top up here at just under 73, the 3T line crossed below the T line, and then the price started closing below the T line, and then the T line just acted largely as resistance. And actually the 3T line, it was such a powerful decline, the 3T line was serving that purpose instead. And then we came up in what proved to be a corrective advance, even though I was initially entertaining the thought that maybe this would be the first minor wave up of a new up wave, but that doesn't look like it's the case anymore. And we just slightly got above the T line for a couple sessions there, but the 3T line stalled right at the T line and then rolled right back over, and now we've closed well below the T line and did a huge bearish engulfing. So I am definitely favoring some downside here, and possibly a major top in the crude market, although it's still quite early to be calling that. And if you see on this this chart here, this 100% relationship, that's if I can zoom out here, I'll zoom out a little further. This 100% relationship is basically where we have this initial leg up for A, then we have our triangle B, so that initial length of A projected off the termination point of B. 100% relationship for C, that was around 71.2. So on such a large wave pattern, being within $1 or two of what so far has been a top for a Fibonacci relationship, that's a pretty powerful signal, or a pretty powerful relationship. And basically on a weekly basis here, especially on a weekly closing basis, that basically served as the peak, right? So that's interesting. And also on this weekly chart, I'll point out, just zoom a little closer here. So we've crossed below the T line with the 3T line, and actually it's such a strong decline, much like the daily chart, that we're basically hitting resistance at the 3T line on the way down. So I mean, I'll just point it out, it's been quite a while since this has actually had the 3T line cross below the T line, and basically since this since this triangle completed here, we've stayed above that 3 EMA, stayed above that 8 EMA the whole time, and now we've had a cross down. So that's significant as far as those moving averages go. Definitely a change in the immediate trend at least, and possibly a major pivot on this weekly chart. But we won't go too far into that until we have a clear, large 5 down, break some significant support levels, and then have a very clear corrective 3 up. That's going to be what we're looking for on this weekly chart as well. And so far it just hasn't developed far enough to see that. But definitely looking strong and impulsive to the downside here. Let's see here. Crude. I have another chart here as well. This is the bar chart as opposed to the candlestick chart. And, well, let's see here. Yeah, that should be good. Okay. So I have some other relationships drawn here as well. So this is a third wave down, this entire structure here. So just the 50% retracement of that came in at 69.21, and the 61.8% retracement would have come in at 79.40. And you can see we basically just went marginally above the 50% retracement, and I say marginally on a visual basis on this long-term chart with this big long-term ABC up. And then I also had this blue line here, which would have been where we had 4-1 overlap, and we didn't hit it, so that's good to see. You don't want to get 4-1 overlap if this is truly going to be a corrective wave 4. So the fact that it peaked and rolled over before that, also a promising sign as far as calling a major bear market rally top here in crude. And also, go back to our divergence here, so I think I pointed this out before, but just to reiterate, we have this bearish divergence on RSI, right? Bearish divergence on stochastic, and even bearish divergence on our MACD moving averages here. So that's certainly what you'd expect to see as far as the indicators and oscillators go on a significant peak, and we have it. So price made new highs, but RSI, stochastic, and MACD did not. So that's certainly adding to the hypothesis that we have a potential major top in place. All right. Well, hopefully that was a helpful update for you. And I'll certainly be continuing to watch crude. Again, no current trade in play. Likely some near-term downside here if this bearish engulfing has some follow-through, which I suspect it will. But not a good time for an entry. I'd want to see this have a complete impulse wave down, have a corrective bounce up, and then I'd be looking to sell some futures contracts short, or buy some puts, or however I decide to play it at the time. So, well, that should be good for now. There'll be some other updates over the weekend whenever I get around to it on some other markets, but I just felt this was the most relevant as far as what happened since the last set of videos there, so I did it first. Alright, Serial Trader signing off.